No. Okay. Folks, we are live. I'm early tonight. I'm just doing a little bit of research on the corona numbers. And what we're going to talk about, I guess, pre-show here is happy holidays. Happy holidays. Bear with me as I still prepare for Senator Warren tests positive for COVID-19. Elon Musk must be laughing his ass off right now. Many prayers. Hope she's okay. That's too funny. Senator Karen. Okay, we got 7 minutes to go here. I accidentally pressed start. And if I end the stream right now, that means that everybody I sent the link out to will go into a dead link. So I have to stay live. Let's do what we got. David, check out December 1986 market fractal to Bitcoin this month. Interesting correlation. So you're talking about an overlay of, you're talking about fractal math like Hedgeye. I don't know much about that, to be honest with you. But if you're talking about an overlay of the 1986 market relative to Bitcoin, am I right in saying that? Say the S&P 500 Wilshire 5,000 relative to Bitcoin? And if anybody's got any chart requests or want me to go over while we kill some time here, let me know. And I'll share my screen. Don't let me not share my screen. Yes. Okay. So, yeah, I don't have a chart. I don't think. Maybe I do. Who knows? Well, there's no Bitcoin back then, so I can't do it. I don't have the setup right here, right now to do that. How would I do that? I can't do a time frame going back to 1986 or the 1980s because Bitcoin didn't exist back then. I don't know how to overlay current date to then using stockcharts.com. So I would like to. Now you got me thinking about it. Downtrend all during December of 1986, extended cycle. ES down to 45.90, then turn around Tuesday. So yeah, a couple of things that occurred over the weekend that are going to impact the market, and I don't think for the better. One of them may sound good. One of them definitely doesn't sound good. One of them is that you had Senator Manchin out of West Virginia. He's a Democrat, but he's going to block Build Back Better, that $2.2 trillion or $2.5 trillion boondoggle of communist spending that the Dems wanted to push out to drive us further into debt. That may spike the dollar, and that less spending is not going to help the market. Remember that since 2020, March 2020, when the stock market was in a downtrend or when in a correction, full-blown correction crash, It wasn't the Federal Reserve that saved the day. It was Congress. Congress said, "Hey," because whatever the Federal Reserve tried to do didn't work, and the markets they would announce a new thing. We're going to cut by a half percentage point on a Sunday night. Markets would rally next day, following day, hammered, new lower lows. They had to go to Congress and say, "Listen, what we're doing ain't doing it no more. You need to spend." So that's what's been really propping up the market is the spending, and the fact that we're not going to have that is a major, major concern. Add to that, you know, you have lockdowns going on everywhere, all over Europe. Your London is going to lock down again. It's coming here soon because in 2022, the Dems are in so much trouble for 2022. They got to have mail-in ballots. They have to have it. If they don't have it, they're gone. They're devastated. So expect some real draconian, crazy stuff to go on between now and election day. It's going to be. You think it's Orwellian now? I don't think we've seen anything yet. I really don't think we've seen anything yet. This is just beginning. Hey, Bo. How you doing, brother? Good to see you. Folks, don't let me not share my screen, okay? Don't let me not. Ricasso Chioti, like that name. Build back better, build not pass. Correct. Yes. And that, while it sounds good, it is good. The market's not going to like it. It's not going to like it. The CBDCs will control what we spend our money on. Scary. You're talking about digital dollars? Is that what you mean? Digital currencies? Louis. Hey, brother. All right, what time we got? We're almost there. Almost 6 o'clock. Almost getting ready for another Sunday Night Futures Live. One more minute. A few seconds to go. I accidentally clicked live stream too quickly. I hit a hotkey of some sort. If you ask me to repeat how I did it, I have no idea. All of a sudden, I was live. And I'm looking at my the camera. My image looks all distorted. Ocasio, thanks for your contact. You're very welcome. Thank you for the comment. That means a lot to me. Thank you. And Bloody, are you running any specials for the holiday season, Bob? Yeah, I think there's a link below. Here. How do I do this? Hold on one second. Hold on one moment, and I will make sure. I put together a special for, I don't know if anybody's out there from the Salty Army, but I put together for them, and I'll share with you folks. Bear with me one second. We're going to get started in a moment. Let me just get this link. I'm going to share a link. I don't know what it is with Chrome lately, but Chrome keeps locking up on me. Come on. Here we go. I got to get my son to increase my speed of my internet. Bear with me. I'm getting that link for you right now. I'm going to share it, and then we're going to get started. All right. Oh, my God. This page is taking like a year to enter. All right. I'm going to have to come back to this. Okay. Let's My entire computer just locked up. Hopefully, I'm still live. Oh my God. Did I just lose everybody? No, you're still here. Good. Okay, I'm going to share my screen. That page is still loading. Don't let me not share that with you. And let's get started here. Okay. Let's get rid of my overlays. Happy holidays to everyone. John Spencer. Hey, brother. Happy holidays to you, my friend. Tom Lou. Happy holidays to you. Merry Christmas. Santa Claus rally. Maybe. We're going to go to the futures in a moment. Maybe. A couple of news items came out over the weekend that I'm concerned about. Good afternoon to you, Talon. Thank you, sir. I appreciate that. I didn't know if I had it still. All right, cool. Thank you. Let me see if that page loaded. It did load. Here, let me see if this works. All right, so check out the details. I'm going to share this link. It's a 3-month free trial. 3-month free trial for $100. It renews at, what does it renew at? $3.99 thereafter for the year, and that price never changes. So it's not like it goes up to the normal rate for the next year, 2023. So that's a discount. Okay, let's get started, folks. All right, what we're going to talk about tonight is the futures action. We're going to go over the news. Let's kick it off first with the futures. William, hello, sir. Happy holidays. Let's begin with equities, because I want to see how equities are responding to the news over the weekend. What's the news? Well, I'm sorry, my internet's so slow tonight. I don't know what's going on here. All right, Elizabeth Warren. This is not loading. This is embarrassing. Let's go to the futures. All right. 1 hour chart. We have the Russell 2000. We are down at current, down about 0.2%. Now, let's go back to a 4-hour chart really quick. Had a nice reverse. This is a 4-hour chart. No follow through in the afternoon. So let's see if we hold support here. We're now down over a quarter percentage point. Somebody just went dumping. Now, I don't know if we're really dropping now. Russell 2000 is really getting a hit. Let's take a look at the NASDAQ. NASDAQ's up. S&P is flat. We want to know if we begin to put in new weekly lower lows. This internet's so slow tonight. It's driving me crazy. SPY lower weekly lows. I don't know what that was all about. So equity futures under pressure here a little bit. Russell 2000 under a lot of pressure, but holding support. William. Yeah, she's COVID positive. The internet for me has been slow for like 2 weeks now. Yeah, I don't know what's going on. Something's up. Regardless of 20 weekly MA has held up for this bull market for a year. It will be interesting to see if the indices break down below it. It's a good point. All right, so the Russell just at the lows of the session now. The Russell 2000 has been unusually weak of late. Let's go back, check out the NASDAQ again. NASDAQ continues to press up higher. Let's see if these pages never loaded. Son of a bitch. Here we go. All right, so this is what I was talking about. Elizabeth Warren, test positive for COVID. Listen, there's something poetic about this. I wish her well. You never want to wish anybody any harm, but there's something very, very poetic about this. Chrome. All right, so this is what I was talking about earlier. I'm going to go back to the futures in a moment. But as we enter the new trading week, we want to keep an eye on the news. And the news matters quite a bit because, as I was mentioning before, we went live at 6 o'clock. I started a little bit earlier. We're talking about things that can move this market. What has been propping up this market? What's been propping up this market is the Federal Reserve's willingness to finance the spending out of Congress. Now you have Senator Joe Manchin, who finally, not finally, he's a pretty good senator, who did the right thing. He did the right thing. He stood up to his party. He says, listen, this is not going to work. $2.5 trillion bucks of deficit spending. You're going to throw it away on nitwits that stay at home and play video games. Ain't going to happen. So he stood up to them, and this plan is dead right now. I heard that they're going to try to double up on the child tax credit for next month, just to stick it to the American people one last time. Here's the other thing, folks. I don't know if everybody's heard about this, but you had the appeals court, and this was such a rigged deal. The appeals court allows Biden's private business COVID vax mandate to take effect. That's January 4th, setting up a Supreme Court showdown. I don't know when the Supreme Court's going to meet on this, but this is a problem. And what I mean by it was a setup, this is a 2-1 decision. So 3 judges. There are, I believe, 8 judges on that panel. And they wouldn't allow a full vote of all the judges. Only 3. So I think what they may have done here, it's either A, nefarious as all hell. I don't think it's nefarious unless they had something on one of the judges is a Reagan appointee. What they may have said is, you know what, this is going to the Supreme Court anyway. Let's just kick it up there. And that's what they did. They fast-tracked it to the Supreme Court. The question is, does the Supreme Court fast-track it before January 4th? Now, I know you don't have to have the shot. You can have testing once a week. You got to wear a mask, blah, 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 blah. Although it doesn't block transmission, you got to have this vaccine. It's just insanity what's going on here. And at some point in time, folks, especially if they begin to lock down this country again, like they're doing over in Europe, this is not going to end well. This is not going to end well. People are done. They're done. So These are the two concerns I have. Not her. Let's get rid of her. These are the two concerns I have most going into the new trading week. I think he did the right thing, but this is not a good thing. Rarely is the good thing or the right thing the good thing for the stock market. So this is a problem. Is it priced in? Maybe. Let's go back to the futures. Okay, let's check out the dollar. I'm going to circle back. I hate that noise. I'm sorry about that. DXY. And I'm having serious internet issues tonight, folks, so I apologize. So here's the problem. Look at this. Look at this spike on the dollar. Look at this spike on the dollar. I just want to make sure this is a right tick. We closed on Friday at 96.55 on the Dixie. We're up. We're not up as much as this is saying right now. We're up over Friday, but we're not up as much as what the chart is implying right now. Let's go to, it's taking into consideration the after hours move on Friday evening. Gold is probably down, yeah, but it's holding support. This is not a bad move, and it's not a huge move for gold with a dollar that's strengthened after the close on Friday and continues to strengthen into Sunday evening opening futures. So let's see whether or not gold holds here. Gold had a pretty good week last week, and at current, we're going to go to a monthly chart of gold in a moment. It's looking pretty good. The question is, does it hold it? Because what we're using as our baseline, as our metric for gold, is a monthly chart of gold. We still have a few trading days left to go in the month. Last month, we had a breakout on gold early on, but it gave up all those gains to close lower. We're back above the monthly resistance level yet again this month. The question is, does it fade or do we hold it? So we're going to be watching very, very carefully the price action of gold. And I got to tell you, the fact that we're only down $3.60 at current, not bad. With the dollar ripping, not a bad. That's pretty good price action. Now, we book profits on a portion of our NUGT trade. That's the leverage ETF putting you along with the gold miners. The dollar looked as if it was going to strengthen, and sure enough, it did. I was worried about the price of the gold miners coming in. We booked profits. Sure enough, they sold off, bearish reversal bar. We're going to be looking to buy back our position. Not as big of a position. I was pretty heavy. But we're going to buy back some of that position that we sold the other day and reload, especially if gold begins to break out on a monthly time frame. We want to be big. I think 2022 is probably going to be the year for gold. Silver, taking it on the chin, down 0.75%. Why? U.S. dollar rising. Let's go back to the dollar really quick. We're going higher. Okay. What else do we got? Copper. Folks, keep an eye on copper. It's down at current. When you take a look at the weekly chart of copper, this is one heck of a chart. One heck of a consolidation. So I'm looking for a weekly breakout on copper. And if we get it, we're going a lot higher. So copper looking strong, although we're down on the session so far. But we are holding support. 10-year Treasury bond. Bond prices are moving up higher, therefore yields moving lower. Now you know why the NASDAQ is up right now. Let's circle back to the NASDAQ. We're coming off the highs of the session. Let's see whether or not we take out lows. I want to go back to the Russell. I want to see if, now we're down a percentage point. Over 1%. Five-minute chart. Very close to session lows now. We're testing the third standard deviation Bollinger Band on a 5-minute chart. We're not day traders here, so the reaction to the upside is not going to be huge, but we're becoming a little bit oversold here. So we're going to bounce shortly. RSI 5-minute time frame down at around 20 now. New session lows we just hit. 1.16% down on the session. Let's see if we're getting a sympathy follow through to the downside by the S&Ps. We are now down on the S&Ps, just shy of a third of a percentage point. NASDAQ still positive, but it's given up a lot of real estate. Checking with Bitcoin. Bitcoin up over 1.5% on the session. Let's pull back, take a look at it from an hourly time frame. Looks okay. 4-hour time frame. Looks good. Consolidating. Home heating oil. I got to fill up. Good. Down nearly 2%. I'll take that. Deflation. Let's check back in with the dollar. Not much has changed. Let's go back to the Russell. Not a ton of follow through here. We should bounce soon. All right. Let's go to the news events. We touched upon, if we have time, we'll go back to the futures afterward. We touched upon the news events. Joe Manchin blocking Build Back Better. Great for the American people, bad for the stock market. This potato gets what he wants so far. Supreme Appellate Court upholds the vaccine mandate. Wonder where they found that in the Constitution, but okay. Economic data coming out this week. We have leading economic indicators coming out tomorrow. Current account deficit, nobody cares about that anymore. GDP. Coming up on the 22nd, Thursday, initial jobless claims. We get inflationary data coming out on Thursday as well. The PCE comes out on Thursday. This is the Federal Reserve's preferred gauge of inflation, probably more manipulated than the CPI, if you could believe that. How can anything be more manipulated than the CPI? I don't know, but it's coming out on Thursday. Friday, durable goods coming out as well. Big inflationary data and economic data coming out on Thursday. Watch it. University of Michigan sentiment survey coming out as well. So they're loading up all the economic data for Thursday. It's going to be an abbreviated week in terms of economic data. Friday, nothing coming out. We go into the new trading week. I talk about this each week. The yield curve. The yield curve is screaming recession. It's on the horizon. Long story short, this chart, when it's moving up higher, it's an indication the bond market sees, hey, things are going right here. Yields are correlating. They're moving up higher. The 2-year, which is yielding less than the 10-year. Those spreads are widening out. That's a good thing. That's a healthy economy. But now the yield curve is going the opposite direction. Does that mean you sell stocks? No. Stocks can still go up. But if this inverts as it did back here in 2020, we all know what happened back in January, February of 2020 when this inverted and yields began to hook back up again. It didn't end well. I have a better chart of this. Why is this not showing my... All my recession data, something just gave. S&P 500 new weekly lower lows. Wow. We were up. We are now down 0.39%. This is what I was worried about. Also, keep in mind that the semiconductor sector broke weekly support last week. Let's see what the NASDAQ is doing. NASDAQ's holding. It's holding positive here. All right, we have our alerts set there. Let's go back to the Russell really quick. Russell bouncing back a bit. This is only a 5-minute chart. The Dow futures are down nearly a 0.5 percentage point, coming off the lows now. Somebody asked earlier about, do we get a Santa Claus rally? I hope so. I really do hope so. But I'll tell you, folks, I've been lightening up on large positions, raising a lot of capital. I'm probably right now in the most cash that I have been all year long. So I do still have NVIDIA trade on. That's taken up quite a bit of liquidity. I have an options trade on NVIDIA, Strangle trade, and I'd like to take that off before I'm going skiing this week. We rented out a house over in Pennsylvania, and it's up in the mountains by Camelback, and I'm going to be going skiing. I'll be away for the holidays. All right, so we're bouncing back here a little bit. Our alerts are set, so if you need to come back, we'll come back. All right, so the yield curve going in the wrong direction. The bond market is sending us a signal right now. Let's pay attention to it. Weekly chart, S&P 500. Excuse me, monthly chart. I promise that I keep an eye on this when we go live. We do not have a new monthly higher high. We are stalling. We are still up on the month by about a percentage point, but this is a doji formation. We still have several trading days left to go. This chart can go in either direction, up, down. Way too early to make a call, but we're keeping a very, very tight pulse on this market, especially now that the Federal Reserve is promising to pull back on liquidity. They're still adding fuel to the fire. Don't get me wrong. Chiller PE ratio, near 39. It's come down over last week, but still very expensive. Buffett indicator remains strongly overvalued. This rose from last week. It was 2.1 standard deviations beyond the historical average. That's this right here, the historical average. You are here. Bananas how expensive this market is. If you're wondering about whether or not central bank liquidity and the amount of money that I'm pumping into the system is correlated whatsoever with the stock market, or in this case, the FANG names, look no further than this chart. Light blue, your FANG names. In, I don't know, even a lighter blue, I guess, like almost a purple. I don't know what to call this color. That's central bank liquidity. Clearly a correlation there that this is going to slow down. You've already seen it in the equity markets. Take a look at the ARK fund, folks. Look no further than the ARK fund. All-time high, 159.70. We are still down below $100 a share. We've been there for a couple of weeks now. What the heck is that? We had a bullish reversal bar last week on the ARK funds. This may rally this week. It was oversold. We may get a rally on the ARK funds. Let's check back in with the NASDAQ really quick. Are we getting head faked right now? Maybe. We may rally here. All right. I'm going to short Google tomorrow if they can't fix this problem. Chrome. Come on, man. All right. Record inflows. This is inflows into the equity markets. Never, ever been here before. Never, ever been here before. And we are beginning to roll over. Money is beginning to slow. I wouldn't say leave. They're not outflows. You're seeing outflows out of the bond market, but inflows into the stock market are slowing up. Which leads me to this chart here, folks. If you ever wonder why, you take a look at a chart of the stock market when it goes into free fall, much as it did back in early 2020. This is the reason. Forced liquidation. We have a record amount of margin debt. And if the selling begins, you don't want to get in front of this freight train. That's why I always like to say today's lows might be tomorrow's highs when you're in a major sell-off, a forced liquidation sell-off in the stock market. This is one of the reasons why I want to be in a lot of cash as we go into the new trading year. I don't know what the new trading year is going to bring. You get the January effect. What is the January effect? Usually, as goes January, so goes the rest of the year. I'd like to see a correction. I'd like to see some of the froth come off this market. Maybe there'll be some opportunities in Q1. But until then, I'm not getting that long of this market whatsoever. We're going to continue to trade options. We're going to still generate cash flow, but we're going to be very, very strategic with how we trade this market. No big positions. Small, very, very small. Let's go to some comments. Sounds like rate hikes are dropped based upon movement. No doubt about it. Do you plan on adding silver? Yeah, silver's so volatile. But yeah, I do. I do. Do you think we'll have 3 interest rate hikes next year if we go into a lockdown? If we go into a lockdown? No, no, definitely not. Definitely not. They won't need to. They won't need to because the market will price it in. Excuse me. Excuse me. The market's going to take down the 10-year yield. It'll be deflation. And then you'll see yields pick back up yet again because what are they going to do? They're going to go back to the printing presses. They're going to send out more stimmy checks, rinse, wash, repeat. What didn't work the last time will not work again. That won't prevent them from doing it again. So they'll go back to the same act and they will print money yet again. Even if there are no lockdowns, I don't think we're getting 3 interest rate hikes next year. That'll devastate the market. And don't forget, you have the 2022 elections coming up. So what I think the Federal Reserve is waiting for right now is this. They are praying to God for a positive CPI report. They will reach for any report, PCE, CPI, whatever report that they can grab onto to say inflation is slowing. If they can say and show data that inflation is slowing, that takes the pressure off them having to raise rates. That'll keep the market from taking a nosedive. So the last thing that they want is to raise rates, no matter what they say. Remember, Jay Powell came out last week and said, listen, we're hawkish. We're going to fight inflation. We are very angry about inflation. It's not transitory anymore. Wow, Jesus Christ. But how shocking, right? You took a look at their balance sheet, which was reported that day. It jumped over $100 billion in 1 week. So don't listen to what they say. Watch what they do. Watch that Fed balance sheet. It rose last week. It didn't decline. It rose. So I don't think they have any intention of raising rates. Probably not even once, to be honest with you. What's the NVIDIA trade? The NVIDIA trade is, I was actually just doing a Strangle video showing the NVIDIA trade. I'll bring it up. The NVIDIA trade it's a strangle trade. So you have 2 types of strangles. You have a short strangle. You have a long strangle. Long strangle is you have unlimited upside, but limited downside because you know your loss up front. You know it up front. It's a defined risk trade. What we'd like to do here is we like to do short strangles, meaning we want to sell the premium. We want to be the banker. We want to be the casino, and we want to generate cash flow. So what we did is I sold, this is old now, the strike here is still the same. Here, let's update this. Let's get rid of that. This was our original strike. Actually, it was up at 400. We booked profits, rolled it down to 360. We booked profits, rolled it down to 330. These are our bands on our strangle. So we sold the open. I think it was originally like 220, 200. Then we rolled it up to 260. We booked profit. We made a lot of money on this trade. Right now, though, I'm way too close for comfort on this NVIDIA 260 strike because I'll either have to do one thing. I'll either have to accept the shares of NVIDIA if by expiration, which is the 31st of this month, if NVIDIA trades down and closes below 260, I either have to A, take possession of, right now it's 1,000 shares of NVIDIA, or B, I have to roll the trade out to January. So I'll more than likely I'll roll the trade. But if we go down to 260, I think that we're probably going to go lower on NVIDIA. So if the market gives me an opportunity with the time decay that we're seeing right now on NVIDIA, I'm probably just going to close out the trade pretty much flat and raise more capital. And that way I can go skiing. I don't have to worry about my call side and my put side getting tested. So we're not long of NVIDIA. We're not short of NVIDIA common stock. We have a short Strangle. And I am preparing a video. I did the PowerPoint today. It'll be published in the next couple of trading days. Okay. I think that's all I wanted to go over. Let's do some chart requests. I have one, at least one. Forest, one of our members put one in there. Let me refresh, see if anybody else did. All right. So let's do this. Roku. So Roku got hammered. I haven't looked at this chart in a while. Wow. Let's clear off all of these. Let's start all over again. Way too much noise. Okay. Wow. There's a lot of damage here. I think 204, 200 to 204 is your support level on Roku. Let's go to the weekly chart. Matter of fact, let's go back to the monthly chart really quick. Okay. Actually, I didn't see this candlestick. Oh, we bounced off the 204 mark. Let's go to the weekly chart. Weekly chart, we broke out last week. Actually, 2 weeks ago, we broke out. So our automated trend lines, I'm going to take them off, put them back on. Note how the week of December the 15th, we tapped these two lower automated trend lines and we bounced. This is a buy signal here. Maybe not a buy signal, it was a watch signal. This is a buy signal here. We've rallied. Do you chase this rally? I'm reluctant to do that. You got resistance up at 244. I like the RSI. Higher lows, higher highs. Very good. Would I chase it? I would wait for a pullback. Let's go to a 4-hour chart. I would not chase the stock. If you get a pullback to say 224.75, give or take a dime, it doesn't have to be exact. and you're looking for a entry point, then you could use that to enter. Let's leave a little bit of sensitivity. And this is one, if you're wondering about covered calls and generating some cash flow, I don't think that Roku is going anywhere very, very quickly. So this is one where if you're going to buy it, maybe you want to sell some near the money or at the money covered calls, generate some cash flow. Look at this Falcon. Holy cow, super chat. Thank you, brother. Bob, your video yesterday spoke about beatdown stocks, no deep analysis, but can you glance 30 seconds at NNDM, AI, SKLZ, PLTR? You got it. NNDM. Oh, we've gone over down dimensions before. Let's go to the weekly chart. You're at monthly support. I wouldn't be a buyer of Nano Dimensions until we closed above $4.60 per share. This is what I always talk about. You get a breakdown, you rally back in an effort to recapture, and then you fail. Wait until 460. You want to see a close above 460. If you get that, game on, then you can start buying NNDM. Tight stop on a new set of lower lows below last week's lows. Daily chart. Let's get rid of all these lines. It's setting up okay. You're still putting in lower lows here, but you're getting some consolidation. In short, the shares have stopped going down, and you have RSI, which is now doing the right thing, which is putting in higher lows. So it's firming up. It's stopped going down. That's the first thing it's got to do before it goes back up, right? So NNDM firming up. AI. I don't like the stock. You got a lot of resistance above. All right, so this bottom here of this candlestick at 36.27, that broke. It's now going to act as resistance. What happened the week before last? It acted as resistance. What happened last week? It was so weak it didn't even make it up to that resistance level. I would be concerned about this being a bear flag setup and breaking. I wouldn't entertain buying the stock until it got back above, let's call it 36.50, and a close above that mark on a weekly time frame, daily chart. We broke daily support. I would avoid these shares until they show strength. SKLZ, daily chart, looking okay. Weekly chart, looking okay. We recaptured support last week, and we closed there. Daily chart. Bullish key reversal bar on Friday. Good stuff. It looks as though you may rally here. You don't have a breakout yet, but if we close above $8.16, I think it's a buy. Short-term swing trade to the upside, looking good. Last one is PLTR. Let's get rid of all these lines. Clean the house today. There we go. Much better. We haven't gone over this one in a while. So this is we came close to the lows of the week of, actually, this is a monthly chart, the lows of May. We bounced so far. We do have a volume shelf. We have several volume shelves above acting as resistance. $20.61 acting as clear resistance right at this volume shelf here. And $20.61 was the low of this bar back in July, which was support, now resistance. Weekly chart. Multi-week consolidation here. I think this can be bought, but if you break down below this lower band here at 1786, you close down below that mark, you want to get out, you want to stay small, then add on strength. In fact, you broke out last week. Weekly time frame. Daily chart. All right, hold on one sec. We'll come back to the daily chart. Something just fired off. NASDAQ just broke. We are not negative on the NASDAQ. What I'm looking for right now is to see, we broke down to new lower lows. Normally you'll get some computerized selling volume behind it. And that's what I'm looking for right now. Are we getting that? Is there follow through? And no, there's really not a lot of follow through on it. The feel that I'm getting right now is that similar to what they did back to gold back in August, is that they're using Sunday night as a way to blow out stops on the futures market. Very light volume, and they're blowing out stops. They're doing it on the Russell, S&Ps. Now they're doing it on the NASDAQ. The question is, will buyers come in and scoop up shares, or is this the beginning of something? And I don't want to make that call right now. I'm worried about this market. I'm very, very worried. But there's not a lot of follow-through selling to the downside here. Let's check back in with the Russell, see what they're doing there. Because if they're rallying the Russell back, that's probably going to happen on the NASDAQ as well. Yeah, and that's what they're doing here. We're still down, though. We're still down 1.5% on the Russell. Let's go back to the daily chart of Palantir. Daily chart, PLTR, outside reversal bar on Friday. You're probably going to get a rally here on PLTR, despite what the futures say. RSI looking good. You just got to beware with these stocks that are down on the year or down on the quarter. A lot of these fund managers, they're going to be sending out the year-end statements, the quarterly statements, and they're going to dump their dogs. So just be careful. And as I've been saying all night long, stay small. Stay small. We don't know what the new year is going to bring. We don't know if they're going to come in and they're going to be net buyers, net sellers. All I know is this, is that we have a Federal Reserve that's talking hawkish, still acting dovish. We have a very expensive stock market, and I got to be honest with you. Uh, the 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 dystopian tyranny that I'm seeing globally, it's coordinated. There's no doubt. It's a medical tyranny that is occurring right now is very scary. It's very very scary. And you may be saying, I got my shot. I'm good. Nobody's going to bother me. That was the opening salvo. That's the grooming. What's next? So it's never ever over. So I worry quite a bit. Forest. Thanks. I went in real cool at 212, stops at 225. So that's your exit point, 212, 225. Let's bring Moroku back up. Where did it close? We're right there, no? 230. Oh, I see. All right. All right. So you got it at 212. Right. Okay. I'm with you. I'm with you. I like your stop. Your stop is right around here, right where you have some bottoming tails. So you're preserving your gains. You're letting it run. I like it. Good strategy. Very good strategy. Jody, how dare you? Week after week, late. Great to have you, though. Happy holidays. You're welcome, Falcon. You're welcome, man. My pleasure. Thank you. Patrick, I'm in PLTR as well. Madman with his hot stocks. All right. What else we got? I have 6 minutes to go. Cost, Jim. And we got Randy with PTON. Cost, Randy, PTON. Let's do them. Costco, love Costco. Love the company. Love the stock. Going higher. Oh, wow, a lot of alerts firing off tonight, folks. What fired off? Which one? SPY broke the new lower lows. That's the second time tonight. Broke but bounced. Now down about a half percentage point. You're not getting the follow through. You're not getting a lot of selling on those breaks to new lower lows. Note the volume bars. They're not big. Now we're down a half percentage point. Woof. Blowing out stops. There we go. 0.55 down now, 0.56. 56, yeah. 56. What's the NASDAQ doing? NASDAQ's down 0.55%. I think they're going to rally this back. I think they're blowing out stops. All right. Costco, monthly chart looking good. Volume is good. We can get rid of all these. A lot of house cleaning tonight. It's a bit extended. Where's RSI out? 88. This is very extended. Overbought, I should say. on a monthly chart. It could still go higher. Weekly chart. We're stalling here. We're stalling here. If you're long, if we break below, oh man, a lot of alerts firing off tonight. This is a record. Dow new lower lows. Is there anything behind it? Now down 0.55% on the Dow. Big volume bars. Russell consolidating a bit, still down. Big. NASDAQ bouncing back. S&Ps bouncing back. Seems like everything's down 0.55% with the exception of the small caps, which are down big. All right. So if we break support at around what was the low last week? If we take out new lower lows, I'd be stopping out. I would be booking some profits, making them real. Take note of your RSI. We put in new all-time highs last week. What did RSI do? It's rolling over. This is a bearish divergence. We're putting in higher highs on price, yet RSI is rolling over. The only thing missing on RSI for Costco is a break to new lower lows, and we're right there. So be careful with Costco. I wouldn't go dumping it, but I would certainly I would tighten up my stops. No doubt about it. Daily chart. Yeah. So what I was looking for on a weekly chart happened on a daily chart. Watch this. Here's your break. We stopped going up. RSI has been diverging on a daily time frame. Then on Friday, we broke support. I'm not liking this chart. I'm not liking the setup here. Doesn't mean you can't rally back in an effort to try to recapture, but there's damage getting done here, both on a daily and weekly time frame, monthly chart overbought on RSI. Be careful with Costco. PTON. I don't think I've ever had to clear off so many annotations in one night. I'm looking at RSI here. I like it. Horrible earnings report. Monthly chart. We do have new monthly lows. We're off the lows of the month. Weekly chart. I still don't like it, and I'll tell you why. What was support here is now going to act as resistance. I think we can rally up to $46. The problem is once we get up there, I think we're pulling back. So from a risk-reward perspective, I don't see the value of, even if we get in where we close at 42.45 tomorrow morning, too much risk, not enough reward for the trade, because I think we're going to get stopped at 46.07. Daily chart. And you can see I'm going to take the automated trend lines off. Where do we get stopped dead on Friday? right where resistance is. So I think it's improving, but I would not be a buyer of Peloton. RSI is looking good. I said that earlier. I would not be a buyer here. I don't want to chase the stock. Let it pull back. Watch and see whether or not it puts in a higher low, and then enter the trade with a tight stop. If we break to new lower lows, I would stay small. And with that, folks, everybody have a completely awesome Christmas. I'm not going to be on Thursday. I will be skiing, hopefully not in a cast. And I hope everybody has a wonderful Christmas. Happy Kwanzaa, happy Festivus, and enjoy the time with your family. And have a happy and safe new year if you're checking out, and a profitable trading week. Thank you for being here. Be well.